You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That distinct lack of music on the live front. And, of course, you listen to it after the fact. It'll sound the same to you. But if I sound a little bit different, that's because I am beaming at you once again from the Southern Studio. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, on the ever-exciting Options Insider Radio Network. Glad to see so many of you folks are enjoying what's going on out there on the pro-tacular front. Out there, a lot of cool stuff has been hitting you folks. You had your double pro Q&A last week. Of course, you can still check out everything on demand after the fact. If you missed anything, Options Oddities coming at you live again tomorrow. So the pro, fun stuff. I kind of call it the coolest secret club in the options biz because we're not really out there promoting it a lot. If you hear about it every now and then on the network, that's kind of really about it. We're not beating the drum. We're not promoting it. We're not advertising it anywhere. It's kind of just you have to know about it. So glad to see so many of you are enjoying it and getting value out of the coolest secret club in the biz. If you don't know what the hell I'm talking about, you want to learn more for yourselves, theoptionsinsider.com/pro is the place to go. Literally the only place you can go to learn the secret handshake that gets you into the club. And if you are part of the secret club, welcome. It means you can listen live to all of the fun stuff that we do here on the network and a whole bunch of other fun stuff coming at you there as well. Remember all of our pro annual members, you get entered into that fun drawing to win it's coming up now, end of July. So coming up, we have to do our drawing for who wins the Pro Trading Crate, the Options Insider Crate for July. So get your name into the hat if you haven't done so already. Sign up over there on the pro side. And then you get entered into that drawing. We still are compiling what's going to go into those boxes. So fun stuff to be had. Learn more at theoptionsinsider.com/pro is the place to go. And let's see who's joining us on the old show today. First, joining me he's actually been giving me, right before the showtime listeners, a running update on the clam piracy. Let me just say, I was always joking about it, but these clam pirates are feet from his door. He could reach out and touch these guys. So there is actual modern day nautical piracy going on steps from where he sits right now. I am joined by the Rock Lobster, Mr. Andrew GIOVINAZZI from OptionPit.com. If he sounds a little bit distracted, it's because he's got to wave his shotgun at these guys every 2 minutes. Mr. Rock Lobster, glad you could join us today in the midst of raging piracy outside your door, sir.
Exactly. I realize that's why we have the Coast Guard, Mr. Longo, that to protect us from all the piracy. But things are going okay. We have an extravaganza tonight. Lots of stuff to talk about today. But thankfully the clan pirates have vamos. So all is back. All is well again. on the dark and stormy shores.
Because they know you're talking to me, and I mean business. They don't mess with Showtime here. So if they're going to mess with Showtime, they're gonna meet the wrath of our producer Gene, and they don't want to deal with that. So they skedaddled pretty smartly as we head on out now to a place where pirates have never darkened their shores. It is, of course, St. Charles, probably because there aren't many shores, except for the Fox River out there in the land of St. Charles. We are joined by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, to you as well, sir.
Always a pleasure to be here, and I'm looking out on the Fox River. I do not see any clam pirates, but to add to that, there's no clams there, so it's hard to have clam pirates without clams.
There you go. I guess you can put away the shotgun, sir. It won't be needed today as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. This is indeed the portion of the show we break down what the heck is trading out there. And coming into our second OB episode of the week here, we're seeing a heck of a lot of green on ye old screen. So apparently the ongoing spread of the Delta variant, not spooking anyone. I'm down here right now in the southern studio. We kind of single-handedly brought masks back to Disney. We've been hitting the Disney parks the last couple of days, and we've been the only kind of schmoes wearing our masks. And now it seems like slowly but surely Orlando just announced they're going to bring them back. Apparently there's a big outbreak of the Delta variant here. So good times. A good time to be down here. And, of course, the mayor just announced that they have to bring it back, and Disney is going to bring them back as of Friday. So masks making their way back out onto the scene, but apparently that's not spooking the market. Like I said, up and to the green. NASDAQ is the laggard today, only up about 1/3%. The S&P up about 0.6%, and the Dow up exactly the same percent, up about 0.6% as well. And we're seeing vol kind of fluctuating a little bit as a result. Coming into Showtime, VIX cash was at about a 17.25, puts it down about 0.75 of a point. I think it was starting to elevate. I think right before I just ran it again a couple seconds ago, it was like about 17.5. So maybe getting a little bit of that juice back. VVIX was at about 113, down about 3 points from our last show. And VXX, aka the product that loves to fade, starting to fade a little bit again. Down shy of the 20 handle again, 29.5 when we kicked off the show. That puts it down about 0.75 of a point as well. And, of course, VolQ, a.k.a. the at-the-money NASDAQ 100 vol, a.k.a. the newest addition to what's trading over there at CME. By the way, if you want a fun breakdown of everything trading in the world of futures options, join me immediately following TWIFO. So you're listening live. It'll be immediately after TWIFO. And guess who I roped in to talk about some futures options? Yep, these two crazy cronies here, the Rock Lobster and Uncle Mike. So probably going to hear about, I don't know, maybe silver collars. We'll see what else. I haven't looked at the report yet for what is moving and shaking. Probably some equity volatility going to make it onto the TWIFO show. I'm just guessing. So stay tuned for that immediately after this show. If you're listening after the fact, listeners, just hit next on your device of choice, and you too can join the fun party that is TWIFO. But a lot of things lighting up the tape out there. It's an Uncle Mike type of day. So we have to start there. Uncle Mike, what is lighting up your tape, sir?
Well, never before in the history of the entire stock market has there ever been a better time to sell than right now. Yes, you heard it here. We are at new all-time highs in the S&P 500 yet again today. We are up roughly 0.6% on the day in the S&P, and we kind of hit the marks that we're at right now probably about 2 hours ago, and we've just kind of been channeling the last couple hours. So it'll be interesting to see the direction with which the market takes going into the end of the day. So we have that going on. 10-year yield, we do have a little bit of a pop in the yield, not a ton by any means. So we are getting some sellers going into the bond world. So stocks are higher, bonds are lower. So oftentimes that's the way it should be, in my opinion. If stocks go up, bonds go down. It's when I think there's cause for concern is when both stocks and bonds both move in the same direction. But today, that is definitely not the case. Bitcoin is relatively flat on the day. And so what we're seeing right now is that the market has seen what the Fed said yesterday, and that they're going to pause, which I think everyone knew that they were going to do anyway. So we had, as to quote Mark Longo, a resounding meh with the Fed news based on the news conference and everything with which we had. We are coming off of Facebook earnings. We've had Apple earnings. We've had Microsoft earnings. We've had a lot going on this week. And so what's happening is apparently the market likes what they see, but the market doesn't love it. So likes better than dislike, and dislikes better than hate, of course. But right now, I would say the market is liking what was said within the conference calls so far this week, with what the Fed said, and looks like we're back to all-time high modes again today. In terms of strategery of what I'm looking at this point in time, I did take some deltas off the table earlier today, in that I did turn just a call spread into a butterfly, just as a means of taking just a few deltas off the table. It's still out of the money, so I still have a long way to go before it's actually much of a factor, quite honestly. But nonetheless, I use this as an opportunity to kind of preserve a little bit of capital in case we do have a little bit of a pullback. So that's what I'm looking at today. If we do continue to go up higher, then we'll profit from a butterfly. But if we do go lower, then I'm happy I took a little bit of my premium risk off the table, because we've had a nice run with this out of the money call spread thus far. So in terms of what I'm seeing, what I'm doing, we have that. And looking forward to hearing the Rock Lobster's take on a 17.5 VIX right now.
Mr. Rock Lobster, if you can pull yourself away from the pirates at your window and indeed at your door, at the gates of the GIOVINAZZI compound, if you will, sir, what is lighting up your tape out there today?
I guess my name was invoked, so I must appear. This is once again, we are at a 17.5 VIX and a all-time high. Like I thought we could do a little better. Like the Fed kind of says its thing. I guess the reality is the volatility is where it is because that's where people want it to be, right? So VIX isn't 12 because nobody believes that we're going to have basically a 12 vol market, which usually for VIX to get down to a 12, you would need like a single digit realized vol. And we're not there.
Don't even say the 12 vol. You're going to invoke 2017 again, where we'll be sitting down and wringing our hands for a year, sir. So don't say that.
Well, you thought, Uncle Joe Biden would be the single digit vol president, but not yet. You'd think maybe, because they call him Sleepy, right? So Sleepy Joe, you think he could be, you think he would be maybe a little bit lower vol, and you think, of course, Trump coming in, of course, higher vol, and yet we've seen at least the opposite for both of them, at least in their first year or so. Yes. So it's nothing as usual with trading. Nothing is how it seems. But I mean, we are at lower vol levels than when we were, I guess, remember we had a little bit of a sell-off and stuff. But I have to be honest with you, we're still not at, again, this is an indicator that Mark uses that I think is pretty good. We're at a higher SPX level, but we're not at a lower VIX level than we were. Because we were kind of cruising around there like the low 16s. So there's still a bid for vol, which this is what it means. People aren't selling their puts back. All right. So everybody's happy to watch their equities go up, but I don't think the put buyers are coming back in and just crushing that 1 month vol. I think there's more aggressive short-term sellers of vol. That's what we'll call it. I guess 9-day VIX is a good indicator. So just to give you an idea of sort of the term structure with VIX, I know this isn't vol views, but so 9-day vol, I believe I had it this morning at around a 13. Yep, it's 13.5 for 9-day VIX. You go out, 21 days later, roughly 3 weeks, right around, and all of a sudden vol is a 1750, right, with the same calculation. So that's a pretty good change in volatility, and I believe the August future is 19.5. Let me take a look. 1962. So you've got a 13 vol, a 17 vol, and a 19 vol, and 10-day vol in SPX is 14.5. So to be honest, okay, I don't think VIX is actually even. It might be a little expensive, but it's not unfairly priced. And the reality is the market really has not been able to settle down and kind of be in that kind of like blurry sort of, I don't know, phase. It seems like every month we kind of have that sneaky 2%, 2.5% sell off. Everybody freaks out, and that's literally the only buying opportunity you have. And then you got to wait for another month until it shows up again. And that I think that's been a pretty good way to describe 2021. So VIX is not going to go down to 12. You need like a couple of months of just not much happening, and for just like real vol crushing to happen. So while we are getting lower levels of volatility from where they were just even earlier in the early last week, we are not getting vol back to where it was with the market at a new high, as TOSAW said. So there isn't that, again, lower vol means confidence. It looks like, I think the Fed, I criticize the guy, but I know he has a big job, and, I'm just like a dumb trader, hanging out on a rock in Maine, looking out the window every day. With not really a ton of responsibility. He has much bigger fish to fry and decisions to make. So, but as of right now, it appears, right, like a little bit of vol popped back in gold and silver. And TOSAW probably should talk about silver a little bit. It looks like a little bit of demand for metal, a little bit of inflation. And the Fed, I think, basically said today, we see the inflation thing. It's there. We're not going to worry about it quite right now, but what we really want is to get back to full employment as fast as possible and recognize this COVID thing is still a pain in the butt. That's kind of what I think he said. And at least because I have some positions in some gold stocks and stuff. So they're actually all green today. They were red for a while, and today's the first day they all flipped to green. So there's a bit of a rally in gold, a bit of a rally in silver. I don't know how long it lasts. But vol, we'll probably get the weekend effect tomorrow, and VIX probably drops into the 716 handle, which is probably a little bit higher than my prognostication from last week. But it looks like that's about where it's going to be, in case anything happens. But we have again, lack of sellers of vol, lack of sellers of calls too. So again, I think the meme market is still with us to a large degree, and it has not gone away yet. So we're about 7 full months into 2021, and this vol regime that we're in really has not changed yet. So that's kind of where we are, and we're still not even at the bottom of the current regime. So it's still exciting. Things are still moving around, but I think 16 is the new 12 for the foreseeable future.
Let's see what that future holds, at least for us right now, in terms of what's lighting up the market today. By the way, I mentioned the coolest secret club in options. I see you out there, the hardcores. I love the hardcores. Tuning in, getting the raw show without any music, any filtering, right raw into your ear holes. I see you out there, Options Queen and Mr. Unlimited. Hey, newcomer Frank 1209. Welcome to the party there, Frank 1209. See, hope you're enjoying that secret handshake that got you into the coolest secret club in options. Let's see what's going on from an overall options perspective right now. It kind of depends where you're looking, how much paper is lighting up that tape. VIX, not the spot to look for a lot of paper right now. About 220,000 contracts on the tape. As of a few minutes ago, that ADV is about 458 right now, so that has ticked down a little bit since our last show. SPY, actually, different story though. SPY closing in on 2.5 million contracts, and that ADV has also ticked up. It's back north of 4. It's about 4.1 million. So SPY looking robust out there again today. The S, not the same story, about 550,000 contracts. The ADV, nearly 1.4 million, though. So the ADV is still firm out there in the S, even if today's paper, not so much. The Qs, 530,000 contracts. The ADV, 1.35 million. And small caps, actually looking pretty active as well. So maybe talk about them a little bit later on TWIFO as well. 386,000 contracts on the tape. 653,000 is the ADV out there in small cap land, including, let's go out to the single names. That's usually where a lot of madness and mystery lurks in the market these days, particularly right now during earnings season. Cost you 232,000 contracts to break into the top 10 today. So they're not playing out there in the single name land. Number 10, that gets you to BABA. 232,000 gets you to BABA. So still hanging out there in Chinese related names for a good chunk of our top 10 here, because number 10 and number 9, NEO, also hanging out there as well. 243,000 contracts for number 9. Number 8, we're getting Mimi with AMC, 295,000. On number 7, the return of an old friend out here, Cleveland Cliffs. Haven't talked about them in a while, but they're back in there with gusto, all the way at number 7. Good for 316,000 contracts out there. Number 6, it's NVIDIA. You know, all this chip madness, driving some paper in NVIDIA. 336,000 contracts. Good for number 6 over there on the top 10. Number 5, the old FB, a.k.a. Facebook, jumping up quite a bit here. 578,000 contracts. And we're only at number 5, listeners. So there's a whole heck of a lot ahead of us. Let's see, what could top 578,000 contracts? Well, it's number 4. It's Ford. Is it a meme? Is it not a meme? Today, it's doing some meme paper. That's for sure. First off, let's look and see what Ford is up to today. Up about half a buck, $14.40 again, nearly 4%. So nice little pop out here for Ford after kind of driving back down to the 13 handle again. That's all good for 674,000 contracts. Listen, I got a feeling some more crazy upside calls are going to find their way onto options oddities after this move. I'm just guessing. I'm just putting it out there. Number 3, it's the old fruit company. Yes, I said the fruit company is number 3, listeners. 787,000. That's kind of a rounding error for today's list. It is trumped by 2 more big dogs. So it looks like the normal king. He's ceding his crown today. First off, to Tesla. They are on fire. 1.33 million contracts today, and the stock is up, nearly 30 handles, or about 4.6%. So Tesla on fire today, and it's feeling the options low. But even that is not enough for number 1. What is number 1, listeners? Well, it's AMD. Almost exactly 1.5 million contracts on the tape right now. That's some serious paper for AMD. AMD usually pretty active, but 1.5 million contracts, that's a whole other level. I got a feeling we'll be coming back to them in a little bit because a good chunk of that is all in one strike out there in AMD. So a lot of paper. Let's look really quickly where the biases lurk. And then we got to get out to some earnings and other fun stuff that's lighting up the tape. AMD looks like it is topping the list today. 77% of that 1.5 million contracts coming on the call side of the ledger. But we're not done, listeners. Uncle Mike alluded to it earlier. It is hot and heavy earnings week. A quick flavorful sampler of what was popping off this week. Monday, Tesla. Tuesday, GE, JetBlue, Waste Management, AMD, and Apple, and Softy, and Alphabet, and S-Bucks. Just on Tuesday. That's a whole season in and of itself, just on one day. Wednesday, our former friends across the street, not right now, obviously, Boeing, Pfizer, Mickey D's, also friends across the street up there in Chicago, Spotify, Facebook, Ford, and PayPal on Wednesday. Thursday, you had the Amazonians and WWE and Gilead coming up, I think, after the bell. Tomorrow, we got Exxon, Caterpillar, P&G, and Chevron. We have earnings move results reports hot off the presses right before showtime from our friends over there at ORATS. Let's see what we've got out here. Let's see. Today's earnings move results reports. We got Qualcomm. That was yesterday after the bell. They're at 142 and about a half. They were pricing in 4.5%. They delivered 6%. So, I was saying, maybe, listeners, perhaps this is the inflection point we have been waiting for this season. Let's see if some of these other names can help keep that trend alive. PayPal, yesterday after the bell, about 302 is where they were going into their announcement. They were pricing in 4.2%. They delivered, look at this, 5.1%. 2 for 2 here, listener. That was the last time we could say that. It's been quite some time. Ford, let's see, they're at 1386 going into their announcement. They priced in 4.8%. What do they deliver? Ford, bucking the trend. Of course, you take today's move in, may be a little bit different. They're up, they've moved about 3.8% from the announcement. Let's see, they're at 13, let's see, where are they right now? I think I said they were nearly 14.5, 1440, right? So yeah, not enough yet, but they're on their way. We shall see. We shall see if Ford can outdo it over the longer term here. Facebook on the 28th after the bell as well. 373 and about a quarter is where they were going into their announcement. They were pricing in 4.5%. They delivered, 3.4%. Now we're going back in the wrong direction. Listeners, let's see if we can get any other hot ones. We also have names popping off here. I could scroll for days through these reports, listeners. Not a ton. 61% is where we stand right now for the season. So a little bit better. I think it was like 56% on our last show, so a little bit better, but still not the glowing outperformance that perhaps we were expecting. We have some normal names popping off. We've got the Amazonians after the bell today. 36.30 is where they were going into this report. They were pricing in, 115 and about a half. In the past, they've moved 136 and a half. So they got the memo out there on Amazon. Gilead today after the bell as well. They're at $70, almost exactly. They're pricing in $2. In the past, they moved about $1.80. So actually a little bit extra juice out there as well. And Uncle Mike's favorite, the key holding of the strategic night portfolio. Of course, I'm talking about WWE. 49.19 is where they were as of this report. They were pricing in $3.50. In the past, they've moved $3.78. So they've gotten the memo out there. Let's go out to P&G real quick. Let's see. 138.76 is where they were as of this announcement. They were pricing in $2.50. In the past, they've moved $3.64. So clearly, the memo has gotten in there. And before we roll out of what's going on today, we can't roll out of what's happening today without talking about some of the other big action out there in the marketplace. Of course, we're talking about the much anticipated, hotly controversial IPO of good old Robinhood. Yes, they did go public, listeners, and they're trading under the ticker symbol HOOD now. Don't ask about the options. They're obviously not live yet, but this is a hot one. I wouldn't expect it to take the full 2 weeks that it usually takes for these. I expect them to have it maybe within a week here. So expect options on Robinhood to come maybe even by our next Thursday show. Hopefully, probably by then. And so, yeah, ticker symbol HOOD. It went public at $38, which was at the low end of its range. I think they were talking somewhere in the 38 to 42 range. Coming in on the low end of that. It looks like they're actually trading a little bit lower right now, down to 37.5. I haven't seen yet the coordinated Wall Street bets attack on Robinhood stock. We'll see if that materializes. If they become what they hate, if they have become what they've beheld and they become the short sellers themselves, we'll see if the Wall Street bets crowd can manage that. By the way, coming in at the lower end of the range, trading a little bit lower today. They did do a little bit of a different thing for their IPO. They reserved somewhere between 20 to 35% of its IPO shares for its actual customers. They're trying to, quote unquote, democratize the IPO market a little bit out there. And then they have a few customers. They had about 22.5 million going into this IPO. So that's a fair number of people using it in spite of all the things we've talked about here on the show, the record fines, the atrocious way that they handle options and everything else. So yeah, it went public, and we'll see what's going on. Mr. Rock Lobster, Mr. Uncle Mike, anything to add here on Robinhood going public or these insane earnings bonanza that we're seeing out here in the market? Anything lighting up either of your tapes? Speak now or forever hold your peace.
I don't know about we're just looking at HOOD, by the way, in this our pro chat room, but we haven't come up with anything to like or dislike about it as yet. So as you had that nice entry, what market cap did they give Robinhood? Like $10 million or something like that? It's pretty dang expensive for a company that still doesn't make any money, but they have a lot of customers.
Yeah, you could see how they were willing to just gobble up that $70 million fine from FINRA like it was nothing, because they were on their way to many, many billions worth of market cap. So whatever they had to pay to get to that point, they didn't care, because that was all about the exit here, listeners. We'll see how this materializes. We'll see how this trades as we keep on rolling. Hopefully some options soon so we could talk about some hot, juicy options. You guys love a nice IPO here. As we keep on rolling, it is time to unleash the Eye of Sauron, listeners. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we unleash our Eye of Sauron upon the options universe, and we see what the heck it has in store for us out here today. Going to kick things off. This is not quite a newcomer to the Odd Block. We have talked about it before, but it has been quite some time. This is Molson Coors Beverage Company. These are the Class B shares, looks like. Ticker symbol TAP, T-A-P. So I love a good ticker. That never hurts your inclusion here on the Odd Block, an appropriate ticker, if you will. There a year ago, before we even get to that, right now they're trading nearly $50, $49.80. They've had a nice run over the last year, and today up about a quarter of a point, so not exactly a big banger of a day today, but a decent year. A year ago, it was trading $36.73, so up about $13 or about 35% from where they were this time last year. And then they kind of drifted lower for a while. Actually, looks like they hit their 52-week low around October of last year, around 32.11 or so. That was on October 28th. And then they bounced back almost immediately by, let's see, in a couple of weeks, they were trading, up to 46.5. They got up to 48 on December 9th. And then they kind of kept rallying. By January 27th, they hit about 55. Then they sold off again down to about 44.5 in February. Then they kept marching north by June 8th. Remember, June 8th, that's that interesting day. A lot of names top out at June 8th, and TAP is no exception. They hit their 52-week high of about 61.5 on June 8th, and they've kind of been trending lower almost every day since, with the exception of today, down to where we find them right now, back down below the 50 handle, 49 and change. So apparently beverage demand is perhaps flagging. Who knows? But let's see what our Eye of Sauron found out here. Oh, Mr. Rock Lobster, I think you're going to like this one because this is right up your alley. Looks like someone looked at this chart, looked at what was trading over the course of the past year and said, you know what? I'm going to draw a nice, juicy, and pretty sizable line in the sand here in TAP. By the way, they had earnings today before the open, so these are immediate post-earnings options that we're looking at here. In particular, it was the AUG 45 put. An interesting strike. Remember, I said the 52-week low is 32.11, so they could very easily, they're trading 49, almost 50 right now, so they could very easily revisit that 45 strike. Someone coming in and blasting away at these. This is post-earnings, so the vol is obviously coming in, listeners, and they got about a 30.5 vol for these things, 20 cents. They were 20 cents at 35. They crushed the bid about 8,000 times. The stock was pretty much not a little bit lower than it is right now, 49.20 or so. So, Mr. Rock Lobster, a decently sizable line in the sand here for TAP, crushing the bid, doing it post-earnings, which is kind of interesting, maybe waiting to see if they were safe with that 45 strike before they did it. Of course, they're going to get a lot less juice for it. They only got 20 cents or about a 30 vol. But what are your thoughts here on a line in the sand, sir? Your favorite strategy this time in TAP?
Once again, the price is about a normal price. The out of the moneyness feels somewhat normal, as it's closer to the fire than normal. I think for a 10% out of the money, it is right around that Ferrari number money. It's like, so it's 8,000 contracts. What is that? 20 cents. It's $160,000. So it's a good chunk of change. Certainly enough gas for your what is it? G4 or G7 or whatever the hot Gulfstream jet is. Probably pay for your jet fuel for a month. Yeah, I don't think this is a bad one. I think after earnings better. What's the Sam Adams? What's the symbol for that one? I was right on the tip of my tongue. That stock did not do well after earnings. It kind of crushed it. Thought it was Sam or beer or
it's Sam, Boston Beer Company.
That's right. So that one, that actually took a bit of a powder, I believe. So yeah, it was a $1,300 stock in April, and it is now a $700 stock. So everybody likes a pretty good beer. But I think after earnings, a better time to sell than before earnings. And a little kind of funny. I guess they were thinking big earnings here. Wow, pretty big multiple for a beer company. So I can see why it's not $1,300 anymore, because that was like 100 times earnings for a beer company. Just so everybody understands. But yeah, I think this is a decent line in the sand put as Molson. The earnings train is probably not going to stop for beer anytime soon. Certainly not the levels that you saw earlier, but you can see a lot of big tech gets all of because it's all kind of crawling around at all-time highs. But a lot of these companies are down from their what I would call like pandemic levels, right? Where it was like beer forever, and there's actually some, I'm not going to say they're totally cheap, but again, interesting put sales in some of these things. It's funny that Molson, multiples are much different. That's Sam Adams is a smaller company, but I think actually this is a very reasonable trade at a good multiples for somebody that wants kind of more like a steady stock, pays a decent dividend. So as a trade, I think it's a pretty decent trade for somebody that has the ability to take delivery of said tap.
Said tap indeed. Let's keep on rolling, listeners. Let's head on out to, let's go back to a name I said we're going to revisit here on the show because it's just doing a ridiculous amount of paper right now, and we are going to revisit it. It is AMD. No, not AMC. Maybe not the one you might be thinking of. No, we're going to go out to AMD because it's just lighting it up. They were, of course, dominating our top most actives today. 1.5 million, 1.52 to be precise. And that was, 20 odd minutes ago. So who knows how many more millions they've done. Could be up to 10 million by now. Of course, I'm joking, but it probably is about 1.6, maybe 1.7 by now. But what lit up our tape, just AMD, just the explosion of paper. Remember, they had earnings, but not yesterday. They had earnings on Tuesday. And yet this thing's still moving and shaking. Let's see, coming into today, how's it looking today? It's up another 720 or about almost 7.5%. So about 105 and a quarter or so right now out there. So AMD on the rampage. And what caught our eye of Sauron's gaze out there today was the July pars. July going out tomorrow. So the weeklies, July 30th, 100 calls. These things are on fire today. They cannot trade enough. Let's see. We saw lots of 1,200 going up for $1.26, lifting the offer, and then 1,137 for $1.30, also lifting the offer. 1,038 for 88 cents. That was earlier in the day. Also, actually coming in mid-market, almost 89 cents there. But these things have traded in chunks pretty much all day. Coming into showtime, over 112,000 had already traded. And you might say, well, maybe that's just closing. They're taking off their July pars going into tomorrow. But the OI is only 28,000. So there's a lot more afoot on this strike here than just someone coming in to close 28,000 maybe short calls that they had on in AMD. Now, there's a lot at foot. Mr. Rock Lobster, this par strike is on fire, doing, closing in on nearly coming by the end of the day. It's probably going to be at least 4x its OI on this strike. Well over 100,000 contracts. This has got to be, in terms of single names and strikes today, got to be the most active contract out there by a country mile. Hence why AMD is topping our most actives. There's no one single trade we had in here because there were so many. It's kind of like the hurricane, but it does seem on balance, Mr. Rock Lobster. Folks are coming in and they are piling in to the AMD pars and paying hefty prices to do it. These are now, $5 in the money. So these are much meatier than they were this morning. But still, a bonanza here on the pars, Mr. Rock Lobster. Over 112,000 before showtime. So folks got to get themselves some July 100 calls in AMD expiring tomorrow. What say you, sir?
Actually, what's funny is one of my students was looking, we were talking about, and I do talk about unusual activity with my students during the week, and we were looking at these yesterday, and he was...
I'm sorry, you're not allowed to do that. You have to reserve that for oddities only on Friday, sir.
Exactly. And he was a good chunk of them. And we were looking at the volume, and I go, the 100 paper yesterday was really, let's just call it substantial. So I think he took a little ride he had and he rolled up to another strike through earnings. Like he took the sure money and rolled up. And even today, he's pretty happy. So, this is, what can you say? The stock is now, I believe this is a new all-time high, chips, because apparently everything in this economy needs a chip. I didn't know that. Mr. Longo, that everything in this economy needs a chip.
I need a chip. I need to replace my chip in the back of my brain. I think I store all this information that I put out. I need a new one. I can't get it.
So that is what we have as far as today, like in Chipville. So, but actually, my kid likes AMD, like their GPU processor. So he's always wanted to buy it. He was hoping to get it in the 60s, and now it's just it is so in the rearview mirror. Maybe he could sell some 60 puts, but that's about it. And it's off to the races. So that's what we got. And I think, yeah, there's just huge call buying, and they ain't gonna stop. So like the July 30 for 126, 130, now they're $50 or $5, and they're on their way. That's what else can you say about this except that AMD is just it's kind of a monster stock, and it doesn't look like there's much to stop it at this point.
Not much to stop it, indeed. Let's see if anything could stop Carnival. It's had a nice little resurgence here. You know, we've been talking about them a lot on Oddities and on the Odd Block here, listeners. Of course, ticker symbol CCL. We're going to look back at one of these trades we talked about not too long ago, about 10 days ago. This is from July 19th here on the show. And in particular, we profiled, before I even get to what we profiled, let's look really quickly again. Check in again on Carnival. Ticker symbol, of course, CCL. Trading right now, 23 and a quarter, up about nearly half a buck, or nearly 2%. So a good day, good week here, pretty much for Carnival. It has kind of turned around since we profiled it on the show. In fact, the day we talked about these puts, Mr. Rock Lobster, was kind of like the 1 month low here for Carnival. It seemed like all the negative sentiment was just coming to bear on them. They broke the 20 handle. They got down to around 19 and 3/4 or so. And that's when our friend struck. Our friend came in here on the 19th and just gobbled up all of the 18 puts expiring tomorrow. So the July 30th, 18 puts. He paid a variety of prices. He paid 40 cents for 12,346 of them. Came back and got more, 11,818 for 37 cents. A total of about 33,000 traded on the day. So let's just round it out to about 38 cents here on these bad boys here. And looking at the stock, where it is right now, Mr. Rock Lobster, 23.15. So this person out here who gobbled these bad boys up, by the way, these puts still open, as you could probably guess here. So we got a situation here where a couple of things happening. First off, like we said, they averaged out, let's just say, around 38 cents for these puts. So they lost somewhere in the neighborhood of $1.25 million on these puts. That's a bit of an ouchie. That's going to leave a mark. I mean, when you're flying into 10-day puts effectively, you know you need a big aggressive move in your favor very quickly. Otherwise, you're not getting what you need out of these puts, and he did not get it. He got a move. He got it in the other direction. But that is the other part to bring up with this trade, because if you're putting this many puts on, over 30,000, you got to figure you got some stock. Probably in this case, somewhere around 3 million shares of Carnival. So now if you look at it from that perspective, the stock's up over $3.50, about $3.65 from where it was the day of the show. So if they're sitting on some stock, which they probably are, then they made $11 million somewhere in that neighborhood on the stock. So knock off $1.25. That hurts. Obviously, you're not going to just, not going to laugh that away, but you're still up, you're still up around $9.75 million on the stock. So he could afford to buy these puts again. I would encourage him, if he does so, that perhaps, maybe, you don't go out 10 days. Maybe you go a little bit farther. Maybe you do a little bit more to try to pay for those puts. I'm just putting that out there. Mr. Rock Lobster, yet another a very near-term premium buy that we've profiled, sir, that went horribly, horribly wrong. What have you to say, sir?
I think this was one where everybody was worried about the Delta variant. And
yeah, it was crushing everything.
And I have to say that the shocks on that are less now, So now you have to go wear your mask and go to Orlando, and I don't even know how long that's going to last. We'll wait till all the people that took their vaccine, and they're going to be a little angry. I think there's going to be I'm going to guess there's a little bit of backlash on this, but I'll reserve that for later. But this person buying these puts, you have to think that they were buying stock too. I can't, all right, so they spent $1 million on the puts. But normally, I mean, you know how traders are, they're a little savvier, there's buying puts like that. I mean, sure, they could make money. They go, Delta variant's a shot, but, to not close them when the market kind of shrugged it off, I don't know. Would you just waste all that dough on them? So I'm thinking if they bought some stock in some kind of Delta neutral way, or using these puts kind of hedge the stock a little bit, 40 cents is a small hedge cost when the stock was just like, what, $27 a few weeks ago. I'm just looking at the 10-day, the 20-day chart on this. So yeah, so the stock before this whole Delta variant thing was like $24. So, I mean, they bought these puts. The stock was trading, what, 19.21. So, I mean, they bought some stock. They did well. If they didn't, they just got kind of run over. So I think it appears that, you know, the world is going to move on. At least that's as I see the news. But Carnival is still trading, you know, at a pretty big discount to where it was, and rightly so. But I still can't believe they didn't buy any stock against these puts. That's it. It was too tempting of a drop to just ignore. Because like even during the low of COVID, like where did Carnival go? What was it, like went to $12? So you're buying the 18 puts thinking everything is just going to be all to zero again. I don't know that. I don't see how that registers on the savvy scale, to be honest.
Yeah, this one didn't turn out, but they probably did. They probably had stock, and perhaps they bought some more against these puts. Either way, they probably have a sizable stock position, so that's probably making the ouchie of the puts feel a little bit better. But again, yet another kind of nail in that premium buying coffin, listeners. Not saying you can't do it. You certainly can, but you have to be judicious. Give yourself enough time for it to happen. Maybe have some other short legs against it to help mitigate the outlay. And these ones, of course, aggressively did not go his way. We profiled a few people recently, I think it was on Oddities, where they got hit. The stock didn't really go their way, and they cut their losses very quickly. And I was impressed to see that. So this person, unfortunately, did not do so, and they were left holding the bag to the tune of $1.25 million. And now it's time for us to hold the bag on your questions. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, welcome to the Mail Block out there. Glad to see all you folks having fun. Yeah, so good to see. Who else? Nichols. We got a bunch of people floating around in there. Oh, Options Queen floating around in there as well. She of the VIX Precision Infamy. All right, let's just go in. We got a bunch of questions people have sent in. Jose wants to know, what's the best play on a COVID spike here? VIX calls, VXX calls, or SPY puts? So he's kind of doing a twist on the age-old question of what's better for a downturn in the market, right? The VIX upside, the pure vol play, or the S&P hedging type play. Mr. Uncle Mike, we talked about this before. It's been a little while. Jose wants to know, if you had to play for a COVID spike right now, how would you do it? I'll probably take out VXX. I don't think you're going to play in VXX. And personally, I would not recommend that one either. So not VXX calls. So is it VIX calls or SPY puts?
SPY puts. I'm of the school of thought that if you want to buy homeowners insurance, you insure your home. If you want to buy car insurance, you insure your car. Well, there is a case to be made that the VIX upside, if it's a fast downturn, will outperform the puts on the downside puts on SPX or SPY or whatever instrument you use. I'm still of the school of thought that it's not a guarantee every time with which it will. There's times to where the stock market and the vol market both go down in value at the same time. And so to me, I think that if you want to trade it as a short-term trade or something with which you're trying to be aggressive with your money with, like what appears that the guys at the option pit do, then I have no problem with it. Great. It's a wonderful thing. But if you're trying to insure your nest egg, if you're trying to, if you have a 401k with $500,000 worth of S&P 500 exposure and you're concerned with a downturn, then I think you'd be a fool to not use something in the SPX or SPY realm.
Yeah, I've come in many times on the direct hedge route. It still is the only contractually guaranteed, contractually obligated inverse correlation in the business. So that's what you want. That's the way you should go. Here's an interesting one. This actually popped up. I think this came into our advisors options show, but it was a fun one. And I think a worthwhile one to chew over here. on the show here. Get your guys' thoughts on it. By the way, we got Nichols chiming in. Hey, Mark, be careful down there in Delta variant lands. I will be careful. I was wearing my mask before they required it. When they're squeezing people together in some passageways, some of these rides. I don't need these fools breathing on me, so I put my mask on. It's good. Now, if it was a rock lobster breathing on me, it'd be a different story, but we're not there. So let's go on out to Aljo. Aljo wanted to know, I have a question for the show. What do you think about using 1-by-2 ratio put spreads to hedge SPY right now? Maybe short one in the 2 to 5% out of the money put. Maybe short one 2 to 5% out of the money puts, and then buy 2 8 to 10% out of the money puts against it. Do you like that as a protective strategy? Also, how far out can you reasonably use that strategy? It would seem like the value of the extra put hedge diminishes as you go farther out in time. So I'm thinking somewhere in the 1 to 2 month range, maybe 3 months at the outside. Thanks again. Excuse me. You guys are the best. Like I mentioned, we had a lengthy discussion on this with the Oracle from New Hampshire. He ran it through his back testing machine. Some interesting thoughts, as well as the director of risk was on that one as well. Some interesting thoughts from them. But I want to kind of run this through the ringer on this show as well, because it's a very relevant question for right now. Let's start with the rock lobster, sir. Aljo wants to know, what are your thoughts on 1-by-2 ratio put spreads in SPY right now? Short one around 2 to 5%, buying 2 somewhere in the 8 to 10% out of the money range. And if you like them, how far out time-wise do you like to do them?
Those are all excellent questions. What I would say right now is you are paying up big time for those out of the money puts. So when you sell one and buy 2, you're probably paying like a max vol number for the trade. So you're paying a very high price. I think they work better as a long-term trade, like 2 to 3 months. And the reason why is because so that trade to me is a Vega trade. Like, so you want to get long Vega, and you're trying to find a way not to spend a lot of money on it. So if you do go out a little farther in time, you do negate some of the negative skew that you're paying, although you have to pay more net Vega premium, vol premium for it. So it's kind of 6 of one, half dozen of the other. And also for those strategies to pay like you want the gamma to pay, meaning like you're short of put and long too. So in order to get your long puts to perform, you need a big frickin' move. That's why I think if you take it as a Vega trade and then like maybe vol goes to 20, VIX goes to 23, 24, 25, you just unwind the 1-by-2 because the vol expands, the vol of the long contract will outpace. There's a little bit of curve on that volatility, so it will outpace the short one. So the trade makes money because you're not long Vega. So it's kind of, you have to think of, so when I teach my students about this, like how do you want to make your money? If you want a actual gamma trade where those 2 puts way pay for on a gamma basis because SPY falls off the face of the earth, generally you want it a little bit shorter term and closer to the money, but you still need a huge SPY move, and you need it to happen while there's still some time left. Usually at least 2 weeks on a 1-by-2, because then you kind of get stuck in this area where like the short contract still performs, as in it's a short put, but the 2 long contract ones, because they're farther out of the money, the performance starts to wane as you get closer to expiration. So like the short put works, but the problem is it's not how you want, and the 2 long puts aren't working well enough. So generally, as a strategy wise, I like it longer, not shorter, unless I think something's going to happen extremely fast. But right now I too would say, and I'm looking at like the skew, like the prices you're paying for this type of trade are pretty damn big because everybody wants to do it. So it's hard for the trade to make money. You would probably, and you have to kind of sell it on a pop and vol. VIX goes to 25 and you're just kind of getting rid of it because you made money on the Vega. So that's what I would say on that trade as far as how it can make money.
Interesting. Mr. Uncle Mike, anything to add here on the 1-by-2 ratio spreads in SPY, sir?
It's not a hedge. I think you had said, and now forgive me, this isn't the greatest connection today, but I believe you said that the question was that would this be a hedge? It is not a hedge. A hedge is something that can protect you if you have an adverse movement. And of course, if the SPX were to go down 40%, then that would be a phenomenal hedge. But it's not a direct hedge, meaning that SPX could literally go down and you could lose money because of the fact that that short put option will be working against you at a greater pace than the long options are working for you. Is it a trade? Yes. And Andrew described it very wonderfully with how he did it. But the only thing that I have to add to that is that is not, I repeat, that is not a hedge.
You are correct. This is one of those ones where it could drift down and in the near term, and you could lose a decent amount of cash on this one. This is definitely if it is a hedge, it's a hedge for a very apocalyptic downside move. You need a big banger. You need a big banger for this one to really pay off. But an interesting question, Aldry. Now we've got a bunch of different people weighing in on it. All the consensus is definitely do this a little bit farther out. So your kind of analysis was actually a little bit the opposite of what our take is, which is to do this a little bit longer term. You need time for that kind of, as Andrew just broke down and everyone else we just did on the advisor's option as well. You need a little bit of time for that extra put, which is really what you're getting here, the extra put to kick in for you. You need a pretty darn big move. So it's probably not going to happen in a weekly unless you're doing something crazy like an AMC, in which all bets are off fairly quickly. We got Nichols one more time. Nichols chiming in the live chat. Let's hope you got some more Ford in store for us on oddities this week. I've been trading a ton of it lately. Well, don't have the final rundown. Obviously, we don't run all the oddity stuff until right before showtime, so we can get the freshest UA for you folks on that show. But I got a feeling, Mr. Nichols, that Ford's probably going to be on there. Just looking at the amount of paper we're going on, and if past is prologue, whenever Ford pops, people just can't help themselves. They have to buy the 17 halves and the 19s and the 20s and do it for freaking size. And those AUG 20s, as you recall, are still open. We had kind of written those off as being wastes of money, and they pretty much are down to a few cents now. So, but they're still there. So interesting stuff afoot. I would probably wager Ford might make it back on. We'll see. We'll see what the Eye of Sauron delivers for us when we go hardcore into the paint on oddities. But now it is time for us to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we tell you what we're keeping an eye on for the rest of this week until we can gather here together on our next show on Monday, when I will be back in the comfy environs of the studio in Chicago. Let's go around the horn. Let's start with Mr. Uncle Mike, who loves himself a 1x2 put hedge. What are you keeping an eye on for into the weekend, sir?
Not so much. I'm watching just to see how we react to these all-time highs, seeing how we react to the earnings this week. I don't think the market's necessarily had all the time it needs to digest the information that came out this week on earnings, as well as the Fed. And even though we are at all-time highs, I think we are kind of in wait-and-see mode at this point in time as to where the market's going to tip its hat and make the big move. So excited to watch that, and that's what I'll be watching with bated breath, along with the 10-year note yield that I've been talking about quite a bit lately. So continuing to watch that going into the weekend.
All right, Mr. Rock Lobster, what are you watching going into the week, at least until we can gather here together tomorrow on the show for Vol Views and oddities? In addition to, it's funny, I go on vacation. I like to trim my positions down. I could be liquid, be in cash. So I could go and have fun and put my mask on and enjoy the rides. And yet you drag me kicking and screaming into those EDU puts, sir. So you're keeping an eye on those, I'm sure, as well.
I know. I think they're back to what we sold them for.
They are back. They had a little bit of a dalliance there, but now they're back.
Also, an easy rule for people about hedging. I think Mike was 100% right. I didn't catch that hedge part. You don't sell contracts to hedge something. It's real simple. If you do the sell thing on your platform, it's not a hedge. Buying contracts is a hedge. Selling contracts is a way to generate more dollars, generate credits. It's a trade. It's a way to get, but it's not really a hedge. So just, if you're selling contracts and you're thinking it's going to be some kind of hedge, no, I don't, at least the way I look at a hedge, because you could sell a lot of contracts, and you think of it this way. You keep selling contracts and you're like, I'm really waiting for this hedge to work. Okay. And sometimes as the vol goes up and up and up, it becomes not a great hedge. So, or the hedging component goes away. So selling contracts is a trade in a spread, but I don't really find short contracts in a position as a hedge. If you want to hedge a SPY like TOSAW says, just go buy some SPY puts. Anyway, what are we doing? Oh, we had this huge event tonight about how to be a hedge fund. How can a retail trader be a hedge fund, trade like a hedge fund? Lots of tips and tricks in there on how to do things so you can make some bucks. So I'll be doing that with a partner of mine as we launch a new product that actually the product will be just so you can learn how to trade like a hedge fund. So that will be coming out of Option Pit. It's been real fun as we've been creating it. We've been working on it for a while, and it's so good. We're like, okay, I think that this is a product. It's time to be a product. So anyway, that's 8 p.m. Eastern time, which is way past my bedtime normally, but I am going to stay up just to do this.
Is that product called the EDU Put Palooza? Is that what it's called?
Yes. The EDU Put Palooza would be the antithesis, probably. The only thing that was remotely wise there was allocation. I never used more than a 5 lot of something that stupid. But I think we might see our money on that.
I'm getting some green on that bad boy. Hey, go 10 or go home. That's what I say. That's my motto. All right. And Mr. Uncle Mike, same question for you, sir. If folks are intrigued, they want to reach out to you. Maybe they want to debate to you the 1x2 put spread. Where should they go? What should they do?
Feel free to reach me in several ways. Contact me or follow me on Twitter at Mike TOSAW, TOSAW, or visit my website, stcharleswealth.com, if you want to work with a financial advisor who is very versed in the option product and uses it very frequently. I'm more than happy to help anybody almost any time. Not 2 a.m, though, because like the Rock Lobster, I like to sleep at night.
All right, check them out. stcharleswealth.com is the place to go. On behalf of the Unclest of Mikes and the Rockingest of Lobsters, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for all of you in the cool Secret Handshake Club who joined us live. If you're listening live, you get a rare, easy for me to say today, you get a rare treat. You don't have to wait. Twyfo's coming at you hot and heavy right now. So let's get to it.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.